I've been researching Nintendo for literal months at this point, and I've identified a few risks that I think have kind of genuinely put me off it as an investment, or at least I feel really need to be factored into the decision and the ultimate valuation of it at the end. And to be clear, I'm not talking about the risks that might affect Nintendo in the short term, like the global memory chip supply squeeze that is making every electronics retailer increase their price, including Nintendo. Even if that's a 12 or 24-month issue, that is not what I'm talking about. What I'm talking about is the risk of permanent fundamental impairment of the business, and the case that over the long term, the investment loses money. By the way, if you're new here, welcome. My name's Christian. I'm a CPA and senior financial analyst, and that is what this channel is about. We'll do deep dives on businesses. I'll share career advice that I wish I knew when I was starting out, and I'll share some learnings from books that I read and how they're influencing how I think about the whole bigger picture. So let's just get into it. So basically there are three risks that I want to cover in this video. The first is going to be solvency, how Nintendo can go broke. The second will be their earnings power. We know that the moat for Nintendo is the IP. So this is really asking the question, how does that moat die? And then the third risk that I'm going to talk about is currency risk, because if you're investing in Nintendo from Canada or from America, you're probably investing in the American Depositary Receipt, or ADR, which is not the stocks that trade on the Tokyo Stock Exchange in yen, which means that the value of your shares can fluctuate with the changes in the currency. And that is something that I think a lot of people miss or don't think about. So let's get into risk number one. To be clear here, there's no risk. Nintendo has 2.2 trillion net cash on their balance sheet. So this is net debt, that's why it's in the negative, but essentially what it's saying is that they have no debt and they have a ton of cash. So they're not gonna go bankrupt anytime soon, and I just wanted to cover that and put that out there. That takes a lot of risk off the table because 25% of their market cap is essentially cash. And there's real problems with that in terms of how you want to judge management. And we've discussed that a little bit in prior videos, but there's no solvency risk. Now, earnings power is where I get worried. So let's talk about it. I think that there are essentially two ways that Nintendo's moat breaks down in terms of their IP no longer being valuable going forward. And this is essentially that their gamer life cycle, how a child plays Nintendo up until how they experience the characters in adulthood, breaks down. And we're going to talk about exactly how that might happen. And self-inflicted dilution, because it should probably be clear to anybody watching this at this point that one of the big growth opportunities for Nintendo is to take those characters and expand them outside of the gaming sphere. That said, part of the strength of Nintendo is that they can restrict supply of the IP, and that makes it more valuable. So those two things seem to be a little bit in conflict. So we're going to assess that in detail and see, is there a risk of them diluting their own moat by trying to grow? Okay, so let's talk about how the gamer life cycle could break down. This is sort of how I think about the experience of the ideal Nintendo gamer. Essentially, they are introduced to gaming and Mario and Pokemon either through merchandise or through the games themselves or other apps at a young age and become acquainted with them. In their younger childhood years, they play those games like Mario Kart and Mario games with their friends. And then as they sort of get into the teenage years and young adult years, they probably phase out. If they keep being a gamer, they probably go to like a more serious gaming machine like a PC or a PlayStation. Maybe they're like commuting or something, so they play some mobile games and things like that. Basically, there's like this natural exit point for these gamers, and they sort of leave the Nintendo ecosystem at that stage. Not saying that happens to everybody, but I think this is typically what happens. And then in later years, either because of nostalgia or because the games are a little bit simpler and they still want to play games, they sort of enter back in, and you buy a Switch and you buy some of your favorite series, and then nowadays maybe some of the indie games that are on the eShop like Stardew Valley or whatever. And it really works because you have less time, maybe you have kids of your own and you have fond childhood memories and you want to show them to your kids and they become acquainted, and this life cycle sort of continues. The issue we have to ask is, what happens when that loop breaks down? That, I think, is really how Nintendo would die as a business. So if that was to happen, because they have this sort of later cohort of people that are kind of reaching their peak earning years and still love a lot of the characters like Mario and Pokemon and that type of thing, I don't think that weakness would show up in the numbers early. So let's look into that and try to figure that out. Nintendo has only once shown demographic data for its users, and this is what they showed us. So this is an age distribution chart, and we can see that the primary cohort is in that 20 to 30-year-old range, and then this long tail off into older age. I would say that is not a great signal for what we just talked about, but I don't know if I really trust this data, because at the end of the day, let's say you're a 30-year-old dad and you have a kid who's like 10 years old. Is that kid gonna make an account for themselves, or are you gonna make an account for yourself where you pay for Nintendo Switch online and your credit card is on the account and they use your account? I kind of think it's probably a lot of that happening. So I don't totally trust this. So I think we should go a little bit deeper here in trying to figure out what is actually happening. This chart here is from the 2024 ESA report. ESA is the Entertainment Software Association, and they have collected data and made these reports on the gaming industry since the 90s for like almost 3 decades. So it's a pretty reliable source. And what I thought was interesting when you look at the data is that back in 2004, 34% of gamers were under 18, and now in 2024, it's only 24%. So what that basically means is that the average age of a player used to be 29, and now it's 36. Less kids are playing video games. And I think there's probably 2 reasons for this, and both matter. The first is that really, I think there's probably just less kids. If you look across the world, like fertility rates are declining. Now, obviously in some of the more developed countries, there is immigration to sort of offset that. And I don't have any data on this, but I think most immigration is sort of like university age or older. So take that for what it is. But I think the trends are not really in Nintendo's favor here. There just seems to be less children playing games. And there are other studies to back this up. For some reason, the site won't load for me, but there's this study done by the Pew Research Center in 2008 that showed that 97% of American teens are playing some kind of video game. In 2024, a similar study showed only 85% are playing video games. So there seems to be less kids playing video games. Whether or not that's because of demographics or because of preferences, I don't think the American trends, which is the bulk of Nintendo's revenue, are in its favor. And I think that partial causes of that are probably applicable to other markets that Nintendo operates in, like Japan with very low fertility rates and also low immigration. But while this tells us that kids are playing less video games, it doesn't tell us if Nintendo is any more or less popular than it used to be, right? So I think that is also important to understand, because even if less kids are playing games, if Nintendo is even more popular than it was in the past, then maybe it doesn't matter. They're taking more of that market share. Or it could be even worse than just less kids playing games, right? So what I thought might be a good proxy for this is the Nickelodeon Kids' Choice Award for favorite video games. If you've never heard of it, Nickelodeon does these awards for kids every year, which are voted by kids, and they've been doing it for over 30 years. So there's actually like a pretty long track record that we can look at to see what video games are popular with kids these days. It's not perfect, there's probably some bias, but I think it's okay as a guide. So here's what the data looks like. These bar charts are a count of every game that was nominated, and the black and red represent Nintendo games. So in this year, there's only one Nintendo game nominated, and in this year, every game nominated was a Nintendo game. And when it's red, it means that a Nintendo game won the vote for most popular game. What we can see is that back in the 90s, Nintendo was on a killer run. They were nominated every single year and they won most of them. These years, 98 to 2000, were pretty kick-ass. Since 2010, although they have basically been nominated every year, they haven't won. Now, I'll let you think about that and what that means, but here's how I kind of think about it. If we're thinking about relevancy for kids, being in the vote matters more than actually winning. I think as long as they remain relevant, that's what matters, they don't have to have the best game ever, they're still going to sell 10 million copies of Mario Kart. Mario Kart is never going to win the best game of the year. It's been around for 20 or 30 years. But as long as people still want to play Mario Kart with their friends, I think that's what matters. That said, I think there are a couple caveats that we should take into account as well. If I just go back to this chart here, if you think about it, it's not really a fair comparison, because what's happening is you have independent games that are being up for vote. And my analysis is looking at Nintendo. It's not independent games. If Nintendo has 2 games in the vote like they do in these years, the vote is getting split. So they're kind of at a material weakness each year. And that's also partly why I think that them being in the vote is more important than them winning. The other problem though, and this is where I actually think that there's an issue, is that the internet has changed what kids want. And that's also probably why they aren't winning as much since the 2000s. If we take the same data and we split it between single player or couch multiplayer games, and then social or party games or user-generated platform games like the games that are on Roblox, it splits incredibly cleanly. Since 2010, only the social or user-generated games have won, and Nintendo doesn't make those. So the preferences of what kids like to play has clearly shifted. It probably continues to shift, and I do have a little bit of concern that Nintendo isn't making the games that kids want to play anymore. And I don't know if I even want them to start trying to do that, because their bread and butter is making a great single player game or local multiplayer game with a great story. I mean, the reason Nintendo originally became successful is because they were kind of the first to integrate stories into their games. So that's their bread and butter, and I just don't know if that is what is popular nowadays. If you have any insight into this, please leave some comments below. I would love to read them, because I think this is the biggest question that I don't necessarily have an answer to when trying to underwrite the company. Now, here's what I want to talk about in regards to it. Like we said, Nintendo's moat is not necessarily the games. Their business is the games, but their moat is the IP and the characters that people love. And to date, they have created that love through games. One of the things that Charlie talks about in his book, Poor Charlie's Almanac, is how great businesses benefit from technology shifts that they didn't start or invent. So he gives a couple examples. The first is Disney. They had this back catalog of movies, and even though they didn't invent the VHS tape, once that was invented and distribution became easy, they made billions of dollars because people wanted to buy those movies to have in their homes and show their kids, etc. The other example he gives is Coca-Cola. So Coca-Cola had its formula that it would sell to shops and individuals, and they didn't invent broad market refrigeration. But once that was invented and widely distributed, more people could more often enjoy Coca-Cola in its ideal form, being a cold drink. And what that means is that more people wanted to drink Coca-Cola, and they made a ton of money. I can see the same things with Nintendo because their moat is the IP and not the games. So, for example, they didn't invent the GPS, they didn't invent the smartphone or the iPhone, but because of those things, Pokemon Go was able to be created, which obviously was like a super viral trend, and people still play it today, and they continue to license it and they make money from that. And again, I think maybe you're kind of seeing it with the new Pokapia game, which seems to be this crossover of Animal Crossing and Minecraft and Pokemon, and has sold really well for Nintendo within the last year. And they're coming out with like expansion packs and that type of thing. So they didn't invent that style of game, but they can adapt their IP to those games. So I think where I land on it is that even though they might not be as relevant today as they were in the past, they're still important and popular with children. And I don't see any sort of major issue happening to them within the next 10 years, but longer than that, who knows, right? I mean, anything can happen in 10 years, but I don't know if the demographics are really in their favor for like 40 years down the line, but we cross that bridge when we get there. The second risk that I'm going to talk about in this video that I think is really important and worth thinking about is that self-dilution risk, right? They're expanding Mario and Zelda into movies and theme parks and more merchandise. And one of the things that they've been so good at, and why the character mode is so strong, is that access to those characters can only come through the games and whatever consoles that they've made. So is there a risk that by expanding the touch points for the IP across the world into other domains, people sort of get tired and lose interest in those characters? So what I want to do is actually look at a couple businesses that have done this playbook before and see how it works and see where it's successful, and then can we take that and apply it to Nintendo and get some insight out of it. The first one I'm going to look at is Disney, obviously, and I learned this through listening to the Acquired podcast on the Walt Disney Company, and I really recommend them as a resource. But what I've learned is that the business model for Disney basically works in the following way. First, you have this world-class core IP that you create. In their case, it's the movies. In Nintendo's case, it's the games. But you have these characters that people fall in love with because the art is so good and so fun to watch, so lovable, and just excellent. Part of the reason why it works, by the way, is because it's animation, it's not live action. So if you think about Star Wars, for example, all the original Star Wars cast is now like pretty old, and it's tough to sort of transition the franchise away from them to other characters. They're trying to do it, but it's harder than an animated character who never ages, never dies, etc. The second part of the flywheel is that you basically try to get that great art to as many people as possible. This is a little bit different than Nintendo's strategy. They sort of restrict access to their IP by you having to buy the console. So a bit of variance there. And then the third key point here is that you expand into as many high margin categories as you can. So Halloween costumes, lunch boxes, toothbrushes, you name it, you can get a Disney version of it. And even making more movies that are sort of not the core, that don't get released in theaters and that type of stuff, doesn't damage the IP. As long as the core IP stays excellent, you can kind of do whatever you want with all the other stuff, and it doesn't really seem to damage the brand. So I think that's quite important to recognize for Nintendo. They can probably expand into licensing merchandise and that type of stuff without risk of diluting the interest in those key characters, as long as the games remain excellent. Now, the second example that I want to look at is probably the most important one, because it's Pokemon, and Pokemon is obviously part of the Nintendo family. If you didn't know, it's actually 32% owned by Nintendo. It's not entirely owned by Nintendo, but they've been along from the beginning. Nintendo consoles are the only place you can play Pokemon games, etc., etc. Now, Pokemon is very different than Nintendo's been in the past. It is one of the most aggressively exploited IP in the world, and that is why it actually has by far the highest lifetime revenue of any IP ever. The Pokemon Company is private, so it's a little bit hard to get information on it, but from a few different sources, from Wikipedia, they say that the lifetime revenue is 130, and then on fandom.com, they estimate that the franchise has done 150 billion. I don't know exactly what it is, but the next highest is Mickey Mouse with 61 billion on this Wikipedia chart. So Pokemon has clearly done a good job monetizing the IP. I think what's really interesting is if you look at some of the expert analysis, they estimate that only 1/5 of Pokemon revenues come from the games themselves, and the rest is all licensing and merchandising. And because it's such a large private company, it's actually required in Japan to report some key financial metrics every year. So this is it here, and I've put it through a translator. But essentially, if you look year over year, they grew their revenue 40% this year. And Nintendo is sort of entitled to 30% of that. I think the issue for me with Pokemon is that if you think back to the Disney flywheel that we just discussed, even though their revenue has gone up that much, if you look at the core game scores over time, it's actually on a pretty clear downward trend here. It looks like the Arceus game sort of was pretty good and pretty well enjoyed, but this is a pretty clear slope to me that the quality is going down. And if the Disney flywheel is true for Nintendo and it's true for Pokemon, that would be a sign of early damage to the brand and to the franchise. It's sort of a sign that the franchise is being squeezed harder than ever, but it's maybe drawing down that affection resource and not replenishing it as fast as it's being drawn down. And I think what backs this up is that when I go and I look at the prices for some of these Pokemon cards nowadays, which are completely insane, by the way, all of these are older Pokemon. And I can tell because I know all of them from when I was a kid. I would expect some of the more popular Pokemon to be newer ones if they were still doing a really good job with the games and with the core IP. And obviously this is just the top 12, but you can go and look yourself and scroll through the list, and there's not very many new ones on that list. And that honestly worries me. It worries me because Nintendo is so closely tied to Pokemon, and for that brand to be damaged would in turn definitely damage Nintendo in my eyes as a potential investor. So I think what we should do next is do the same analysis here for Mario and Zelda, the two most important wholly owned IP for Nintendo, and see how that works out. So if you look at this chart, it looks like there's been a little bit of a dip over time, but more or less quite steady. And when we go and we look at Zelda, this to me looks really good. Maybe it's even improved over time. Maybe there's a little dip here, but it's kind of just right back up. And I think we can take away from it that Nintendo is probably a better steward of the IP than Pokemon might be. A little bit of speculation here, maybe it's hope, I don't know, but I think that because of the close ties between Nintendo and the Pokemon Company, if the Pokemon Company really isn't able to manage its quality for a long enough period of time, I would think with its 32% stake, it might be able to push some level of influence onto the Pokemon Company, or maybe in the best case scenario, acquire it outright. I don't know. I would hope that is the case, but I wouldn't really be betting on it either. So I think the overall takeaway here from this risk section is that the sales number of a game isn't necessarily the metric to monitor. It's the quality of the game. That's what matters for a business like Nintendo. Because that value is the IP, the quality is what matters. And I think that's an important insight because it means that we can monitor the Metacritic scores of the games as they come out and hopefully get a leading indicator rather than a lagging indicator of whether or not the moat is still intact. And then the third risk that I'm going to discuss in this video is the currency risk, because like I said, if you're investing from outside Japan, you're not truly investing in the shares of Nintendo, you're investing through a depository receipt. What you really need to understand here is that if you invest in Nintendo from outside the country, your total return is the sum of the returns that Nintendo has in Japan plus the returns on the currency valuation. Basically, you can be completely right that Nintendo is a brilliant investment and still lose money if the yen weakens. And that is exactly what has been happening. So this chart from Macro Trends is US dollars to yen. So if it's going up, the yen is getting weaker compared to the US dollars. And over the last 15 years or so, that has just basically continued to happen. So even if you invested in Nintendo back in 2011, and it has grown a lot since then, your gains are not the same as someone who invested in it in yen from Japan. That said, I'm very far from an expert on macroeconomics and currency fluctuations. So I think unless you are too, the proper way to account for this is to either work it into the discount rate that you use or use a larger margin of safety when you're valuing the investment. And we're going to do exactly that in a future video when I value the stock. So where does that leave us? I think at this point, what I would feel confident concluding is that there's no sign of damage yet, but I feel like I understand the risk factors a lot more, and I feel a lot less bullish on the company than I did when I started this analysis and sort of worked out the moat. I think it has a good future. I don't think it has an amazing future, but over the next 10 years, it could still be a good investment. So what we're gonna do in the next video is we're gonna look at the management and try to work out how they think and whether or not they're honest and competent. And then in the video after that, we're gonna value the company. So if you wanna see that, please subscribe. Otherwise, thank you for watching, and I will see you next time.